Hello, I'm Sam Slator from FundCalibre. I'm joined here today with Elite Rated Manager James Mahon, who runs the Church House Tenax Absolute Return Strategies Fund. Hello, James.
Hello.
We first met about a year ago when you explained a little bit about the fund, its origins and its objectives. It's been quite a volatile 12 months since then, but the fund has actually managed to produce some steady, strong returns with, I think it's January, the only month where there was a slight fall in the value of the fund. How have you managed that?
Yes, it's been an interesting and volatile year. Been a number of events going on that do seem to have led to significant volatility across asset classes, really. I think it's perhaps important to remember that the structure of the fund is such that we expect a low volatility result. So the limits we have, the risk controls in place do ensure that we are very broadly diversified and that we don't have very big exposures to any one asset class at any one time. So we would always expect to produce a low volatility result. Having said that, we really quite welcome these events in terms of what they do for the market. I wouldn't like to say we necessarily welcome them otherwise, but in terms of what it does for the market, as far as we're concerned, volatility just brings opportunity.
So how is the fund positioned today and where are you finding the opportunity?
Well, at the moment it would appear a very cautious stance, and it is in the sense that approaching 50% of the fund would be in near cash instruments. So floating rate notes, which is still a big feature of the fund, and short dated instruments, principally sterling instruments, but some in dollars as well. We like, as the volatility goes up, we do like to have more dry powder, if you like. So what we find is that when we get these instances of volatility, markets are overreacting, so we get opportunities. We like to be ready to trade quickly when we see fundamental value appearing in any particular asset class.
And the next 6 months or so are likely to continue with the volatility theme. We've got the US election coming up, we've got an Italian referendum and possibly a hard Brexit event here in the UK around March or later. How will you deal with that? How can you position the fund in a way that we can navigate our way through that?
Well, I suppose again, just to step back, we're not a macro fund in that we're not trying to take a view on the outcome of Brexit or any of these particular events. I think that's possibly folly in this climate. So if we consider that risk is heightened at any one time, as clearly it is at the moment, then we will have more available firepower. So we will have more cash instruments, more instruments that we can move quickly. And we always shy away from over-complexity. We don't wish to embrace huge complexity. We think that in these volatile markets, complexity can frequently lead to problems.
Okay, thank you very much.
Pleasure.